Long-term rental loans have become a popular offering by private and hard money lenders lately. In this video, I'm going to explain a few reasons why you should consider these loans for your rental properties, what the typical guidelines are, and where to find lenders that offer long-term financing. I'm Rocky Batani, CEO of PrivateLenderLink.com, where investors and brokers can easily find direct private and hard money lending companies throughout the United States. If you're in the investment real estate business and want to gain valuable insights into private lending, be sure to subscribe to our channel and click the bell icon to be notified every time we release a new video. For real estate investors who own single-family homes, condos, or 2 to 4 unit multifamily properties, private and hard money lenders now offer a long-term loan at much lower rates than what they typically charge for a bridge or a rehab fix and flip loan. Fueled by institutional capital markets, these programs started to gain popularity in late 2018. You may also hear them referred to as a LTR loan or DSCR loan. LTR is just short for long-term rental, and DSCR stands for Debt Service Coverage Ratio. Most of these loans carry a term of 30 years, but some lenders offer 5, 7, or 10-year term. Most of us in the private lending industry consider long-term to be anything longer than 5 years. This is a great alternative to conventional financing, and there's a few reasons why a real estate investor would consider a private or hard money lender for permanent financing. Reason number 1, speed. Private lending is generally much faster than dealing with banks. If you're on a tight timeline, chances are your loan will get funded faster with a non-conventional lender. And if it's a purchase, I've even heard of some private lending companies that will consider doing an in-house valuation and then close the loan, and after the closing, they'll order the formal appraisal. And that could end up saving you days, maybe even up to 2 weeks if appraisers are really busy in that particular region. Reason number 2, easier qualification. The main qualification for these LTR loans is the rental income, or more specifically the DSCR, or Debt Service Coverage Ratio. Basically, that just means that the lender wants to make sure there's enough rental income coming in for you to make the mortgage payments. And they typically don't require tax returns, but they do require decent credit, and the minimum credit score is going to be around 680. Reason number 3, no portfolio limits. Many conventional lenders won't lend to you if you own more than 4 properties, including your primary residence, and some will go up to 10. In private lending, there's no limit on how many properties the investor can own. The lender may just require that the property be held by an entity and not by an individual. Reason number 4, no seasoning requirements. Most long-term rental lenders don't require the property to be occupied for a certain number of time before you can get the loan. In fact, the property doesn't even need to be occupied. You can have the property ready to rent, and you can still be looking for a tenant. You don't even have to have a signed lease. The key is you just have to have the property in move-in ready condition. We published a separate video which covers all the guidelines for these long-term rental loans in detail. However, here's a short version. At the time of this recording in late 2020, the interest rates range from 4.5% to 8%. All lenders charge origination fees which range from 1% to 4%. This is more commonly known as points, so 1 to 4 points. The maximum loan to value is 75%. I've seen some lenders go up to 80%, and that's if it's a prime location. Some will go down to 70% if the location is not as favorable, but it's going to range from 70% to 80%. And all lenders require formal appraisal for these long-term rental loans. There's no way around that. Loan amounts range from $75,000 to $2 million per property. It's not going to be easy to find lenders that'll lend less than $75,000 per property. And lastly, the property must be classified as residential. So this includes single-family homes, condominiums, townhomes, and 2 to 4 units. Also, it can't be a specialty property type with a lot of acreage, for example. Okay, now I'm going to show you how to find long-term rental lenders on our website. You can do a search straight from the homepage, or you can go directly to our long-term rental page, and I'll put a link to that in the description below. So you want to just type in any region and hit search, and then on this page you're going to see a bunch of lenders. You can scroll down and look at all of their lender cards, click on view profile for any of them, and to find their long-term rental guidelines you want to scroll down on the first page until you get to long-term rental criteria, and that's a section that has all of their guidelines for long-term rentals. So that's how you can find residential LTR lenders on our website. If you found this video to be helpful, please click the like button and be sure to check out our other videos about long-term rental financing. Thank you for spending time with me, and I look forward to seeing you in the next video.